From Lagos, Nigeria's financial capital, welcome to the program here on Channels Television Business Incorporated. I am Bosinda Mofaye. Egypt becomes Africa's second largest economy, pushing South Africa to the third place. Germany posted surprisingly strong growth in the first quarter of 2016. Plus, Japan's transport ministry officials raided the headquarters of Mitsubishi Motors to conduct on-site inspection after the company admitted manipulation of fuel economy data. Let's start from the top story from North Africa. The latest report from KPMG shows that Egypt is now Africa's second largest economy after Nigeria, pushing South Africa into the third place. South Africa was already struggling with its demotion from the first place after Nigeria rebased its gross domestic product in early 2014. Now, South Africa may have to settle for the title of the most advanced economy only, holding on to the infrastructural and regulatory advantages it enjoys. According to the KPMG report, why South Africa's economy declined from 2012 to 2015, the Central Bank of Egypt tightly managed the country's currency. The South African currency weakened from an average of 8.2 rand to a dollar in 2012 to 12.74 rand to a greenback in 2015, and that was a 50% depreciation in value. Japan's transport ministry today raided the headquarters of automaker Mitsubishi to conduct an on-site inspection after the company admitted the manipulation of fuel economy data. Ministry officials walked into Mitsubishi's Motors Tokyo headquarters around 9 a.m., the first time since the scandal broke out last month. Mitsubishi Motors admitted last month that it overstated the fuel economy of at least 4 of its car models, mini cars sold in Japan, including 2 sold under the Nissan's badge. Meanwhile, the automaker Nissan itself on Thursday announced it will take a controlling stake of scandal-ridden Mitsubishi Motors. Nissan CEO Carlos Ghosn says his company will acquire 34% stake via private placement plan of Mitsubishi Motors. Meanwhile, at the Asian stock markets today, the Japanese car maker Nissan shares was up 4.1% after the company clinched the deal to make a major stake, worth $2 billion, in embattled rival Mitsubishi. Mitsubishi Motors shares itself were down, though losing more than 1.7% after Thursday's rally of 16%. The Japan's Nikkei 225 was down 1.4%. In China, the mainland Shanghai Composite closed down 0.3%. The Hang Seng Index in Hong Kong was down 1% today. In South Korea, the benchmark Kospi Index was 0.5% down. The Australian ASX 200 was also down 0.6% at the closing bell. A very surprising, strong economic data. First quarter growth from Germany, the Europeans' #1 economy. Let's cross over to Frankfurt Stock Exchange, where Ulrich Bart is standing by for us to take us through today's trading day. Ulrich, thank you very much for coming through. Talk us through your economy. That was a strong story for the first quarter, but the question is, shall we all hail Germany for this strong growth that we see now on the data?
I think the German growth is going in the right direction. It's certainly a piece of good news, and it's also good news that the consumers are contributing so much, especially as the exports are suffering a little from the problems in emerging markets, for example, from China. So overall, it's encouraging. It's better than expected, but there are still economists here that warn, let's look at it a little bit more closely, and then it doesn't look so brilliant because it was a very mild winter here in Germany. For me, that's not a big problem because I hate the cold. It was still too cold for me, but it was warm enough for lots of construction and building activity to go on that otherwise would not have gone on in the months of January to March in that way. And of course that upped the growth in the Q1 and first quarter in a way that it did not in the previous quarter. And this activity will be missing now in the next few months. So economists are projecting that growth figures that are upcoming won't be quite as stellar as what we saw just now.
Yes, too cold for you in Germany, too hot for me here in Lagos, Nigeria. The weather you're looking at, 32, 34 degrees centigrade. So a tale of two different worlds. But what are you driving, Ulrich? What are you really driving? 1.3 million new car registrations in April in the European Union, almost 10%. So what's driving the car market there in Europe?
The car market is being driven by a few things. Consumers have more buying power. In countries like Germany, they also have great job security and higher wages. And of course, the low oil price, low interest rates all contribute to a good atmosphere for buying cars. And that contributed to that number that's the best number since April 2008, I have written down here. And what does that mean? That's a few months before the financial crisis hit Europe and hit the world. So basically, the market by volume is back where it was pre-Lehman, and that's pretty big. That's pretty good news. Of course, it also shows one how long it took really for the economy to overcome this, and of course, in many sectors, it hasn't overcome this crisis yet. It's interesting to note that almost all manufacturers benefited, even Volkswagen, despite Dieselgate, despite that emissions scandal, and overall, the German manufacturers seemed to be the driving engine in getting people on the road.
Okay, let's get some perspectives into cross-border investments and businesses here. Two German companies, Bayer and BASF, have their eyes on agricultural giant Monsanto in the U.S. Why do they want to? What do they want with Monsanto? Will it be a game changer for either of these companies or both of them, Bayer and BASF?
Yeah, Monsanto is sort of a solitaire out there in that business. They're needing to become stronger. Monsanto failed to become stronger itself by not being able to take over Syngenta last year. And now it seems like a prize for BASF and Bayer, which are both in that business of agricultural technology, agricultural chemicals, insecticides, or also a seed business. It's very controversial in many countries. It's this kind of genetic engineering is controversial here in Europe as well, especially in Germany. But it seems to be a good business prospect. And BASF and Bayer, of course, haven't confirmed that they're looking at it. But they could become a stronger world power with taking over a company like this. And the market is saying that's not that improbable, and it would cost a lot of money. So BASF and Bayer shares both suffered greatly yesterday when these rumors first surfaced, and they're still lingering, so the shares are still lagging behind. Monsanto, of course, shot up, and it's a story that we'll want to follow, not only because of the financial aspects, but because of the agricultural aspects, the social aspects in so many countries of this world.
Okay, Ulrich, thank you very much. You're in Germany, you're in Frankfurt, I'm in Lagos. We may need to trade places sometime really soon. You get here in Lagos and I'll be over there so that we can trade places. Okay, enjoy the weekend. See you then. Ulrich Batz, DWTV financial correspondent from the Frankfurt Stock Exchange. When we come back, Andrew Nevin, the chief economist at PwC Nigeria, is joining us live in the studio to discuss the new PwC's Africa Business Agenda report released on Tuesday at the World Economic Forum in Kigali, Rwanda. Stick around, we'll be back with that.